And speaking of cost of living, we've got interest rates potentially on the increase and a lot of talk on the housing industry. For more, joining us live is Ray White, Chief Economist, Nerida. Conisbee,
hi.
Great to see you.
Yeah, you too.
So we'll get to New South Wales being rated the worst ranked state in Australia at a moment. But in terms of auctions and what you're seeing at the moment, how's it going?
Yeah, look, it's starting to stabilise. If you have a look at the last couple of weekends, we obviously had Easter. There was a lot of uncertainty. We've had a couple of interest rate rises now, and of course the Middle East conflict. So all that uncertainty did lead to a real drawback in activity, particularly open homes. So the number of people attending open homes. This weekend, yesterday, actually was not bad. So it was a lot better than we expected, primarily because we did see a decent clearance rate, but also those open home numbers are looking better. So we track around 10,500 open homes, and it has finally stabilised. So we're hoping, this is a little bit more of a better outlook than what we expected the last couple of weeks.
And what's your take on this? New South Wales being ranked the worst state in Australia, higher rents, heavy tax burdens, as well as slow job and retail growth.
Yeah, it surprises me. I mean, if you have a look at what's happening in Victoria, that tends to be the state that people single out as being a high tax environment and not business friendly. I guess the challenge for New South Wales is primarily around housing costs. If you have a look at the median house price in Sydney, it's sitting at 1.7 million. It is a state that doesn't build enough, so that's challenging. And then you move to regional areas and we're seeing a very similar situation. So I think from a housing perspective, definitely it is very problematic, but then from an economic growth perspective and also from a business attractiveness perspective, it is looking a lot better than Victoria in particular.
And what are your concerns with the Middle East crisis? Again, very uncertain on how it's going to go, but with supplies in the housing industry slowing things down.
Yeah, so the big issue with the Middle East conflict and housing is around construction cost increases. So we have seen them reaccelerate. It has been a lot to do with labour costs, but materials costs were looking a lot better. We don't expect that to remain the case. And if you have a look at a lot of building materials, they are made of petrochemicals. So obviously things like plastic piping are going to see an increase in costs, also paint, but also supply chain blockages coming up again. So the challenge is that although we do expect house price growth to slow this year, particularly in Melbourne and Sydney, because they are much more sensitive to interest rates, we do expect the cost of building a home to increase. So longer term affordability will continue to be a big problem.
And that brings the question, doesn't it, in terms of providing, paint and petrochemicals and supplies and making them here.
Yeah, absolutely. I mean, the problem is the materials that are used to create these products. We do need to import them, and unfortunately, a lot of them are being produced using petrochemicals. So that's one of the challenges, but also just getting things here. We do expect what we saw as a similar case during COVID, that once we see those supply chain blockages, we've got labour shortages, but then it also leads to productivity problems because obviously if you're building a house and the bath doesn't turn up, you can't finish the house. Similarly, if the tilers don't turn up, you can't finish the bathroom and can't finish the house. So we already know it's taking twice as long to build a home as it did 5 years ago, and we don't really expect that to change and potentially get a lot worse.
Are there other options, like, for example, when we're seeing diesel and we're talking about biofuels and using canola and other off-products more? Is there something like that with the building industry?
Yeah, absolutely. I mean, we can use different materials, particularly in places like Perth where they're very dependent on brick. Obviously, bricks need gas and gas is very expensive at the moment. So, we know that shifting into other building products does make a bit of a difference. The other challenge, though, is around the construction side itself, that a move to modern methods of construction would be a big step forward, but we're still, very far behind using things like modular. Robotics is another thing, moving from a trades-based development to more of a factory-made development does change the types of workers that you need. So there are ways to do it, but it's very, very slow-moving. It's not even, AI can't really help either. It can help a bit, but not in the same way as we're seeing in finance.
And stuff like that we've seen as well, haven't we?
Yeah, absolutely.
We've got to wrap it up, but just quickly, the next interest rate announcement will be May 5. People are throwing up whether we could go into a recession. What are your thoughts?
Yeah, it's possible. I mean, I think the markets are pricing in around a 70% chance at this point for a rate hike. I think obviously the Reserve Bank will be watching everything very, very carefully. Consumer sentiment is now at record lows. The ANZ have been tracking it since 1973 and they've never seen it so bad. So, things like that starting to pop up are concerning and does suggest that if we do start to see rapid rises in unemployment, we could be heading to a recession.
Great to see you. Thank you so much.
Thank you.